Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. John McAfee murdered. A close look at the curious circumstances surrounding the death of this famous crypto millionaire, who he was and what he might have left behind. Going green. The Gemini exchange details its plans to buy up carbon credits while a US crypto mining company raises millions to become more sustainable. Why one of these solutions is not like the other. Bitcoin miners migrate. Chinese miners land in Kazakhstan as Bitcoin's hash rate recovers. How this highlights Bitcoin's immunity to crypto crackdowns. Centralized custodian chaos. Fireblocks loses tens of millions in Ethereum and billions in Bitcoin disappear from a cryptocurrency exchange. Can any of this crypto be recovered? EIP 1559 on the line. The controversial upgrade lands on Ethereum's testnet. What the numbers are showing so far and when we could expect to see it live on Ethereum's mainnet. Airdrops for everyone. El Salvador airdrops BTC to its population as it inches closer to full Bitcoin payment integration. Why this is both a cause for celebration and concern. ETFs everywhere. Brazil becomes the first country in Latin America to approve a Bitcoin ETF, and the SEC delays yet another Bitcoin ETF. Could certain cryptocurrency exchanges be behind the delay? Binance bashing. The UK regulator takes aim at the world's largest crypto exchange and makes noises about banning it from operating in these islands. What's going on, and should we be worried? Crypto market flash crash. Bitcoin hits its lowest price since early January as institutions buy the hell out of the dip. How this proves the bull market isn't over. And a closer look at the crypto market's gradual recovery in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Crypto and computer legend John McAfee was found dead in his Spanish jail cell last week, shortly after a Spanish court had approved his extradition to the United States. If you have no idea who this guy was, here's the short story. John became rich and famous for creating the widely used McAfee antivirus software in the 1990s. He sold his entire stake in the company shortly after it went public in the late 90s, which landed him a fortune of over $100 million. Most of which was lost during the 2008 financial crisis. When cryptocurrency started getting off the ground a few years later, John positioned himself as one of the major influencers in the space and amassed a large following as a result. He even created a few crypto projects of his own, most of which were essentially carbon copies of existing cryptocurrencies. Now, John was known for being a bit of a paranoid conspiracist and had multiple run-ins with the law in the past. He was notoriously suspected of being involved in a murder in Guatemala in 2012 and investigated over the unlawful possession of multiple firearms. All this makes up just a fraction of his overall rap sheet. This time around, he was wanted for tax evasion and illegally promoting ICOs during the last bull run. Now, while John's death is officially labelled as a suicide, some are not sure, given that he had repeatedly stated in the past that he would never off himself. He even went as far as tattooing the word whacked on his arm to highlight his belief that his death would be at the hands of US authorities and not by his own hand. Not only that, but John also claims to have amassed terabytes of sensitive data about politicians and businessmen over the years that would be automatically released when he died. This is known as a dead man's switch, and some believe that this release of information was activated on the Ethereum blockchain after John died. However, there does not seem to be any concrete evidence of any dead man's switch at this time, and it's more than likely that these developments are just a continuation of John's paranoia post-mortem by fanboys. I'll be taking a closer look at John and his extraordinary life in a video later this week, so stay tuned for that. Another curious development last week was the announcement that the Gemini exchange will be purchasing hundreds of thousands of carbon credits to offset emissions from Bitcoin mining. The initiative is called Gemini Green, and it will involve a partnership with a non-profit called the Climate Vault. For those unfamiliar, carbon credits are given by governments to companies that act green. These can be traded on secondary markets and sold for a handsome profit. Case in point, it's how Tesla makes most of its cash. Each carbon credit gives the holder the right to emit 1 ton of CO2, and this scheme ultimately results in polluters simply purchasing carbon credits from renewable energy-oriented companies to avoid carbon tax liabilities and other environmental sanctions. Interestingly enough, Gemini is aware of this, which is why all the carbon credits they purchase will be pulled off the carbon credits market entirely and custodied with the Climate Vault non-profit. This will essentially prevent polluters from milking the carbon credit system in the way that they have since it was established, which is certainly a good thing. That said, it seems that the Climate Vault will still sell some of these credits to fund companies and initiatives that are truly green, and not green based on some set of arbitrary government criteria. Gemini hopes that this new setup will be at least enough to offset the carbon emissions created by any Bitcoin the exchange holds and custodies. Other crypto companies are taking similarly novel approaches. A US crypto mining company called Stronghold Digital Mining has raised over $105 million in a bid to use waste coal to mine cryptocurrency. Waste coal is essentially what it sounds like, leftover materials from coal burning that are often discarded and sometimes end up doing serious damage to the surrounding environment. Stronghold has come up with a way to turn this waste coal into energy to mine Bitcoin. They hope to have over 28,000 miners up and running by 2022. Now you can learn more about how Bitcoin mining really affects the climate by watching my video about that using the link up there in the top right. Speaking of Bitcoin mining, shuttered Chinese miners are beginning to migrate their operations to other countries where energy is cheap. Kazakhstan seems to be the most convenient destination, with one of Bitcoin's largest mining pools plugging in there last week. Others are looking to North America and Scandinavia. While this should mean that Bitcoin mining will become more decentralized, apparently many of these mining companies are merely relocating their physical hardware overseas while continuing to coordinate operations from within China. Nonetheless, it's nice to see that Bitcoin's hash rate is back up on the rise. This basically confirms that more miners are connecting to the network. Now, if all of this sounds like gibberish to you, well, be sure to check out my recent video about proof of work versus proof of stake. It'll be waiting for you in the description. These days, it seems that every crypto win is coupled with a crypto loss, and this was especially true last week. For starters, crypto custodian Fireblocks managed to lose the keys of an Ethereum wallet which contained over $70 million in ETH. Fireblocks is now being sued by its affected clients because the employee in charge of the private key in question not only deleted it by accident, but even failed to create a backup of the key in case of emergency. Now, the situation has since escalated, with Fireblocks saying that it's the client that is at fault because they also had access to the private keys and failed to back those up too. I'll admit it's all a bit confusing. The very next day, over $3.6 billion in Bitcoin was declared missing from a South African cryptocurrency exchange. AfriCrypt was founded in 2019 by two brothers who have apparently run off with all the Bitcoin belonging to their clients after promising daily returns of 10%. Now, where have I heard that one before? Anyways, this duo seems to have known what they were doing because they apparently managed to mix all the BTC on various mixers and tumblers, which has made all the stolen BTC untraceable. Now, while there's no official confirmation of an exit scam at the time of shooting, it is extremely unlikely that AfriCrypt was hacked, as its client emails claim. After all, if it were really another run-of-the-mill Bitcoin hack, those hackers wouldn't have mixed their funds, they would have sent them directly to a centralized exchange instead, if you catch my drift. Now, instances like these serve as a sobering reminder that there's only one way of knowing for sure that your crypto is secure, and that is self-custody. Now, you can learn about the best software and hardware wallets by watching my videos about those topics. They're in the description if you need them. One of the benefits of the recent Ethereum loss, at least to those of us who weren't custodying ours with Fireblocks, is its effect on restricting ETH supply, which is front and center in Ethereum's upcoming EIP 1559 upgrade. EIP 1559 will see a portion of each transaction fee on Ethereum burned, with the remainder going to miners. This tokenomic change has had its challenges, with some miners threatening to stage a, quote, show of force on the Ethereum blockchain. This show of force never happened, and that's probably because most proof-of-work Ethereum miners know that their days are numbered as Ethereum approaches its 2.0 upgrade, which will transition it to proof-of-stake. Ethereum's London upgrade is one of the stepping stones on this path, and it contains the EIP 1559 upgrade. Ethereum's Ropsten testnet marks the first of 4 testnets that precede London, and assuming everything goes smoothly, we will see EIP 1559 go live at the end of August. In the meantime, Ethereum's testnet activity is shedding some light on how significant this change could be. So far, it looks like we could see more than 1,000 ETH burned per day. Now that's not bad, but it wouldn't come close to offsetting Ethereum's inflation rate of around 13,000 ETH per day. As we all know though, Ethereum's gas fees can get astronomically high when the market is moving, and I reckon it's possible that we could see in excess of 13k ETH per day burned for a sustained period of time. If you want to know more about what Ethereum's been up to, you can watch my recent video about that by using the link up there in the top right. Another exciting development last week was El Salvador's announcement that the government will be airdropping Bitcoin to its citizens. As with all free things in life, the Bitcoin airdrop has a few strings attached. For starters, only adults are eligible to receive the $30 in free BTC. They'll also need to download the government's own Bitcoin wallet app and will need to provide KYC in the form of a facial recognition scan to create a wallet address. On the surface, it doesn't sound much different from the Chinese government airdropping its digital yuan to its citizens, and we all know what implications that kind of CBDC can have on a population. Although Bitcoin is not centrally controlled like a CBDC, it's likely that El Salvador's own Bitcoin wallet app will be. This could cause some serious problems down the line, and not just in terms of privacy. The estimated $200 million of buying pressure coming from the El Salvadorian government will likely result in a similar degree of selling pressure from the individuals who receive the free BTC. Whether or not this will influence Bitcoin's price depends on whether El Salvador implements the infrastructure required to use BTC as a means of payment at merchants around the country prior to the airdrop. This is another thing that remains to be seen, and it's something that I'll be taking a closer look at later this week. If El Salvador's Bitcoin rollout wasn't bullish enough, Brazil's largest stock exchange has just listed its first Bitcoin ETF, which had been approved back in March. Unlike Brazil's other exchange-traded products, QR Capital's Bitcoin ETF is backed purely by Bitcoin. In other words, whenever someone buys the ETF, QR Capital must purchase an equivalent amount of BTC behind the scenes. In case you didn't know, Brazil is the largest country and largest economy in Latin America, and you know what that means. With multiple crypto ETFs trading on stock markets to the north and to the south, it's a wonder why the SEC keeps delaying its decision to approve an ETF in the United States. As I mentioned in last week's crypto review, the SEC had delayed the Cryptoin ETF decision to July the 27th, which is yesterday. Given that they have now also delayed their decision on the Valkyrie ETF, I have a suspicion that we won't be seeing any fireworks today. If we do, I'll be sure to put an appropriate image here. The new decision date for the Valkyrie ETF is August the 10th, which is around the time the SEC is expected to make a decision about the Van Eck ETF, which had also been delayed till 2 weeks ago. As explained by one of Van Eck's executives, these deadlines are somewhat arbitrary. The SEC could decide to approve all of these ETFs tomorrow if it wanted, it just seems to be dragging its feet. The question is, why? And the answer seems to be exchanges. Some of you may recall that one of the SEC's primary concerns about crypto relates to exchanges operating outside of their control overseas. The elephant in the room in this case is Binance, which still accounts for the lion's share of all spot trading volume in cryptocurrency. Even though Binance is registered and its subsidiaries follow the regulations of its respective countries, Binance's international operations seem to be almost entirely out of reach of regulators. Now, this poses a threat to institutions who are probably under the impression that there's some manipulation at play, given that they accused Bitfinex of doing exactly that with USDT during the previous bull market. The recent crackdowns we've seen in Canada, Japan, and the UK on Binance's international arm might therefore be a painful but necessary step in approving more regulatory-friendly crypto investment vehicles like ETFs. Now, on the subject of Binance, my Sunday lunch was rather spoiled yesterday when news began to filter through that the Financial Conduct Authority here in the UK was taking steps to ban Binance from doing business here. Not what one wants to hear over the roast lamb. Now, many of you have been asking about this, and it seems to be a pretty fluid situation. But, as I understand it, UK users can continue using the platform as normal, and the ban is only in relation to Binance Markets Limited, which is Binance's English incorporation. This is according to further clarification from an FCA spokesperson in this Decrypt article over here. Quote, UK customers can continue to interact with Binance Group, which is the international exchange that we all know. However, as I said, this is an incredibly fluid situation and it's constantly being updated. I'll be keeping a close eye on this situation and updating you via my socials channels as it develops. Spoiler alert though, this has all the ingredients of a slice of classic FUD. In fact, this whole question of exchange crackdowns is a topic I'll be exploring more in depth in an upcoming video, so be sure to keep your eyes peeled for that. Now, I think we can all agree that last week was probably the most intense of any week we've seen so far during this bull market. I too was watching the charts like a hawk, and I couldn't help but notice how correlated Bitcoin is with the stock market, especially tech stocks like Tesla, Apple, and Amazon. What's interesting is that Bitcoin hit its lowest point just before the regular markets opened, and in that moment, MicroStrategy moved in to buy nearly $500 million of BTC. Once the stock market went live, ARK Invest bought up Grayscale's crypto trusts and Coinbase stock, and it seems like they weren't the only ones. If the bull market is over, why are institutions still piling billions of dollars into cryptocurrencies and crypto companies? Haven't they seen all the terrifying headlines? This riddle is easily resolved with the following adage: actions speak louder than words. While the institutional media spreads FUD, the mega corporations which back them are buying the dip and expanding their crypto horizons. I think that's more meaningful than any clickbait headline. This buying behavior is what the Wyckoff pattern is meant to portray, and it's been spot on so far. The only thing that's been off is people's interpretation of this pattern, and it seems that I was off as well. For those of you who've kept up with my weekly crypto reviews, you might recall that I'd claimed we would see a spring occur in the coming weeks, and I actually thought this is what we saw last Monday. However, the dip that came later last week suggests that last Monday's crash was not the spring, but one of the now 2 STs in Phase B of Wyckoff's accumulation schematic. What this means is that we might still see one more big crash before moving to the upside, but I must again emphasize that a spring does not always occur in a Wyckoff accumulation pattern. I'll continue to keep you updated on what's going on with Wyckoff, and if all of this flew over your head, I suggest you watch my video about it using the link up in the top right. Turning to the leaderboards, we can see that we finally have some big winners this week, and these are Celo, Quant Network, again, Decred, Clayton, and Crypto.com's CRO token. Celo's price pump seems to have been driven by the news that Andreessen Horowitz had managed to onboard Deutsche Telekom as a validator on the Celo blockchain. Unfortunately, Celo's impressive price action is barely a blip on its sideways price action, and it also saw a steep correction over the weekend that will probably continue into the week. Quant Network once again took me off guard, with the QNT token reaching new all-time highs of over $100 on some exchanges this week. This was, of course, caused by the news that QNT will be listing on the Coinbase exchange, something which was arguably long overdue. An update is on the way, don't worry. QNT seems to have calmed down, but the strong uptrend remains. I want to say that it won't continue, but I won't be surprised if QNT makes the winners list next week as well. Decred's recent rise has its roots in a massive upgrade to its protocol. This introduced improvements to Decred's governance process, private staking, private transaction, and even integration with the Lightning Network. Although DCR is still a far cry from its all-time high, it's definitely moving in the right direction. I'll leave an article in the description about Decred if you want to learn more about it. Now, Clayton is a cryptocurrency that I never thought would make it to the weekly winners list, but it's here, and that's because Clay managed to get a Binance listing last week. Unfortunately for Clayton, the Clay coin continues to collapse back to its pre-2021 price levels, and I reckon its recent listing will only give it a temporary boost. If you want to know why I'm not too bullish on Clayton, you can watch my video about it. It's up there in the top right. The final weekly winner is Crypto.com's CRO token, and there are many reasons why CRO pumped last week. First, Crypto.com has been marketing more aggressively than ever. Its iconic logo can be seen just about everywhere these days. Second, Crypto.com recently clinched a valuable license which no other cryptocurrency exchange has. It allows Crypto.com to not only custody client funds, but also trade them on their behalf. Third, Crypto.com also recently released its own native smart contract blockchain, which it has also been aggressively marketing to new and existing customers. Last but certainly not least, Crypto.com may be seeing an uptick in traffic due to the crackdowns on Binance. I reckon it's why they've been listing so many Binance tokens lately. Now, while I'm personally on the fence about CRO, its fundamentals seem to be getting stronger by the day, and its bizarre price action is nonetheless trending in an upwards direction. Let's see if CRO makes the winners list next week. Place your bets and price predictions in the comments section. Well, that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you want more of me, head on over to Twitter, TikTok, and Instagram to get a sneak peek behind the scenes. If you join my Telegram channel, you'll get the daily crypto updates you crave, and signing up for my weekly newsletter is a great way to get the tools, tips, and tricks you need to get paid. And of course, you can support the channel by heading over to the Coin Bureau merch store and picking up a shirt or hoodie, or both. Links to all these resources are in the description. Thank you so much for watching, and I'll see you all in next week's episode.